Looking for ways to help lessen the impact of market bubbles? Wondering if the advice that you received from your parents or grandparents was any good? Would you like to invest your money like one of the wisest and richest kings in all of history? Then keep watching. How's it going? Sean Williams from Sojourn Wealth Advisory here, and today we're going to cover another key financial concept that can have an impact for you and for your family. Today, it's asset allocation. So what is asset allocation and why should you care? You may or may not be familiar with the term asset allocation. Ultimately, what it means is the selection of the investments that you choose. What should you invest in? In the industry, we use terms like asset allocation or diversification. Our grandparents or parents simply told us, don't put all your eggs in one basket. Solomon, one of the wisest and richest kings in all of history, said, whatever you have, put in 7 or 8s, because you never know when a famine could hit the land. The idea of asset allocation or diversification is nothing new, but unfortunately, it often goes ignored. Now, my best analogy for this is soccer. When kids are first learning how to play soccer, they're all chasing after the ball, and they're out of position, and they're kicking each other in the shins. And that, unfortunately, is what undisciplined investing can look like. It could be .com stocks in the early 2000s, energy prices shortly after, real estate, gold, cryptocurrencies. Everybody focuses on one area of the market and then flocks to it. And unfortunately, that can produce what we call market bubbles. But if you watch international football, it can look like a slower game. But that's because all the players know their roles and know their positions. So whenever the ball gets to them, they know what to do with it. Some teams are built stronger for defense. Some teams are built stronger for offense. But however the team is built, the players know their positions and work as a team. And that's what disciplined investing can look like. There's no guarantee that a team will win, but we want to select appropriate players for their positions. We want to take a look when we structure a portfolio at your expectations of return, your risk tolerance, as well as your time horizon. And so we vet players, we take a look at long-term trends, we assemble a team, and we regularly reevaluate the team. Now, there's some really cool research that I want to share with you, but before I do, it's very important for me to say that past performance does not guarantee future results, as well as asset allocation or diversification does not assure a profit or insure against a loss. Even Barcelona and Manchester United lose. Here's some research done by Russell Investments. This isn't an endorsement or a recommendation of Russell Investments. I simply like the piece of research and I'm sharing it with you. What we have here is a patchwork of different sectors of the market and how they've fared during the last 10 years. Some sectors outperformed better than others, and in this case, no sector outperformed all the other sectors year over year. So now you can see that we can't know for certain where the market will go, and it would be foolish for us to think we could. We can, however, vet investments and structure the portfolio so that we have a team in place. I'll put up a link above or below to my website so that you can check the research out for yourself. If you believe your investments could use a review, be sure to reach out to me. If you enjoyed the episode, be sure to let me know. Comment, share, subscribe, follow, and until next time, sojourn well.